Hello traders, this is Peter and welcome to Wavematics weekly forecast for 22nd to 26th June 2020. We will start by having a quick look at Pound USD. Pound USD, what we are seeing is we are looking for an uptrend, and we've had green wave 1, green wave 2, and now green wave 3 is on this way. With green wave 3, we've done wave 1 of 1, 2, 3, 4, 5, and now we are seeing a zigzag correction of A, B, C to complete blue wave 2 before we continue for blue wave 3 of green wave 3. So now what we are expecting is, if you look at on the lower time frame, on the 1 hour time frame, on the zigzag, we are seeing that we've completed A, B, and now C. So we are seeing 1, 2, 3, 4, 5 for red wave C of blue wave 2. So now wave 5 is not that complete, so we are looking at it coming to maybe hit the channel before going up. But our confirmation level with Elliott wave principle, if we are going with that entry, then the ideal place for us to make our entry is when price retraces and reverse back to yellow wave 4. And if you look at where yellow wave 4 is, it is the same place where if price should go this way, there is a possibility of it breaking out of the channel. So what you can do is you can wait for price to break out from the channel before you buy. If we look at on the 1 hour time frame, we can see that now we are still in the zigzag inside the channel of ABC. So what you can see is, with ABC, now we are having with red wave C, we are having a 5 wave down, 1, 2, 3, 4, 5, and I'm expecting price to turn from any level from here, or the maximum should be it's getting to this side and turning. But one thing we shouldn't forget is, if you are basing on this count, wave 3 cannot be the shortest wave. So wave 3 cannot be the shortest wave. So wave 5, we can see that wave 1 is longer than wave 3. So wave 5 cannot be longer than wave 3. The safest way is to enter the market at when it reverses back to the where wave 4 started. So this level is going to give us a nice confirmation level, and at the same time too, you can also wait for price to break out from the channel before you get in to buy. So I have put in this entry there for swing trading because the stop loss is over 200 pips, 230 pips, which is very huge. If you're having a small account, don't trade it this way, don't follow this entry. If you're having a small account, wait for wave 5 to finish. It's going to get out from the channel, then wait for a small correction like this. You can get an entry outside the channel like this, where your stop loss will be somewhere close, then you follow suit. Remember, let me tell you a story what happened to me some years back in my early days of trading. I was following a mentor who was very good, and sometimes you post charts as you are watching this video, and I did not know a lot about. All that I know is risk management. So, and the account I was using that time was very small, which saved me because I did not get in, or that time I had access to funds, but I said, okay, I'm just trying these things, so let me open a live account with a small amount. So my account was not that huge. So because the amount was not that huge, when I'm taking some swing trades with very huge stop loss, to me, I thought I was risking 2% of my equity, not knowing that because my account is weak, 0.01 was the lowest the broker can offer me. So I was risking more than 2%, but I did not know. So one time I woke up, and I've been in a trade which I was not worried, because even if I lose, I thought I'm going to lose 2%. I woke up and I've lost 10% of my equity, not knowing that that trade that I entered was a swing trade with very, very huge stop loss. So guys, don't forget about this. If you are having a small account, you should always check the kind of trades you enter. Look at the stop loss in pips. Don't be lazy. Don't just follow Telegram channels that are just sending signals. You just see it, then you enter. No, do your own due diligence. The signal can be very good. It can be true. some Telegram channels offers very good signals, but no one is going to manage your trades as in your account size and how much you are risking for you. So you have to do that yourself. So you always have to check the stop loss size in pips and use a lot size calculator to calculate your risk before you enter the trade. So now I've given 2 entries. This entry is for swing trading. Then if you are having a small account, that is why I've given the confirmation level outside the channel, that you can wait for price to break out of the channel. You get a small correction on the 15 minutes time frame or on the 30 minutes time frame, so you can get an entry at that level with your stop loss, which can still allow you to risk whatever percentage you want to risk of your account. Then you can get a buy. We are looking at dollar index now. And with dollar index, this count that we've been tracking is also still in play. We've been tracking 2 counts, but today we are concentrating on this count. So with this count, we've had purple wave 1, purple wave 2, then purple wave 3 is under east way. So with that, we've had a 5 wave impulsive wave down for green wave 1. Then we are looking at a zigzag correction of an ABC to this level, then gets an impulse down for green wave 3. So we are anticipating dollar weakening. So if that should happen, if you cannot trade the dollar index, you can come back to the Euro USD and use it to trade it. So with Euro USD, the same scenario we've had wave 1, 1, 2, 3, 4, 5 for wave 1. Then now we are anticipating a 3-way correction in the form of a zigzag for wave 2 of ABC. So by the time wave C of dollar index should finish upwards, we are anticipating that the dollar is going to weaken after that. So whilst dollar is going to weaken, Euro USD is going to go on the upside, because now Euro is going to get more strength and power over dollar. So we are anticipating this move. The same way we traded the pound USD, you can wait for price to break out from the channel, then you can join the buy. The next pair we are looking at is USD Japanese yen. With the USD yen, we've seen an impulse for wave A and a sideways correction for wave B. Then now we are anticipating the sideways correction to finish before we see our next impulse. So now we are seeing a WXY, a double 3 correction for wave B, and with that we had an ABC for W, another ABC for W, and we've had wave A. So we are waiting for wave B to finish, then we can get wave C. So I'm particularly not interested in the small buy for wave B. I'm more interested in the sell. Before even we go to the lower time frame, let me give you a clue of how you can identify the double 3 very well. The double 3 is like 2 zigzag joined together plus a wave X. We're going to count it this way: 1, 2, 3. Then the whole of wave X is going to be another one for 4, 5, 6, 7. Once you get your 7 count complete, you are going to have a double 3, 2 zigzags joined by it with X. Here is going to be 1, 2, 3, 4, 5, 6, and 7. So the same way, if you're able to identify that 7th count, it's going to give you a double 3. So if you are not able to identify the zigzag, whenever you are looking at whether the complex correction is a double 3, try and see if you can count up to 7. So if you can count up to 7, then it's just a double 3. So you just look at the internal wave counts to see if you can get an ABC, an X, and an ABC to give you a double 3. This is just a bonus. Let's go to the lower time frame of USD Japanese yen. So with USD Japanese yen on the 1 hour time frame, so now we've had wave A, and we've seen that the last time when I was teaching about divergence, I think I did a video which I taught small about divergence before we did the weekly forecast. Price was at this level, and I was telling us to watch it because we are seeing that price is moving up, but the MACD was still showing some weakness. So there is a possibility of price giving us a wave down. Now we've gotten that wave down. So now we are going to use that same scenario. Now we've seen that price is coming down, but the MACD is losing its momentum. It's showing you that there is divergence. Price is coming down, but the MACD is moving upward. So based on that divergence, we are expecting that, okay, then price should give us another wave up to complete an ABC before we come down for wave C. Whenever that you are trading, when I'm doing the forecast, I use a 3-wave pattern to do the forecast. It does not mean that that is the only patterns that can come into play, but that is the first way to do your analysis. You do a 3-wave pattern forecast, then as price, the pattern is developing, then you look at all the possible scenarios that is it can happen in that particular pattern. So this is wave B. So now we are certain that wave B can be triangles. So it can be like this: 1, 2, A, B, C, D, E, which is also possible to give you a triangle before we come. So as you are anticipating a zigzag, you know a triangle is also possible. So you look at all the possible scenarios. So with this, we are not interested in the buy unless you are scalping, but I will not advise, because if it should in case it's going to be a triangle, then wave C cannot be above the inception of wave A, so it's going to be very short. It can end here, which I don't think risk to reward wise is very prudent to enter such a risk. So wait for price to retrace back and give you the wave C, then we will start looking for sell somewhere here, depending on. So I'll keep on updating you on this chart. It's going to be a very good trade. So as dollar weakens, this is a very good trade. Japanese yen is going to strengthen to give you this trade, and then we can go upwards for purple wave C. The next pair we are looking now is the USD Turkish Lira. With that, we've seen on the weekly a nice 5-wave impulsive forming of 1, 2, 3, 4, 5, and with that, on wave 4 we had a nice triangle of an A, B, C, D, E, and now we are looking at the last impulse to complete yellow wave 5. So if we go to the lower time frame, this is how we are going to trade this. On the lower time frame, now we are in wave 3. So we are anticipating price to finish its correction for wave 4, and we've had a 5-wave impulsive down for green wave A. Then I'm seeing a flat, an ABC flat for green wave B. So we are anticipating price to move down to complete green wave C. If price can have the possibility of shifting upwards to maybe this level before coming down to give you an expanding flat, it's still the same flat, but this time it's going to be an expanding flat. So you watch it, and as price finish with that correction and you see any signs of a trend continuation, then you can join. The last pair we'll be looking at is the S&P 500. With S&P 500, we are in a very strong impulsive move. This is the weekly time frame. So we've seen a 1, 2, 3, 4. Then we are now anticipating the last wave to complete yellow wave 5. So that we've had one. So we are looking at price giving us wave 2, then a wave 3, 4, 5. Always whenever it's an election year, they do everything possible. The incumbent do everything possible to push prices up. So you see that if you check Trump's tweets, he's going to tweet about the market, how positive it is, and all these things going to influence investors into coming in. So now that it's an election year, there is a possibility of the price moving very higher. So if we go to the lower time frame, now this is the 4-hour time frame. We've had a 5-wave impulsive wave up of 1, 2, 3, 4, 5, and now we are anticipating a correction, which we've had a 1, 2, 3, 4, 5 for wave A, a correction for wave B, and now we are anticipating the wave C to come down before the trend resumes. So what we are going to do is, if you want to sell, wait for the first wave to correct to finish, then it's going to give you a small correction on the lower time frame. Then you can join the sell. Thank you very much for being with us, and do subscribe to our YouTube channel. And if you have any comments or feedback or any question, leave it in the comment section below, and I'm going to get back to you.